Markets are moving fast, and who has time to read headlines all day? I know I don't. This is why I created Rushing, the first audio podcast that delivers simplified news for busy investors. This is made by a woman who trades and talks straight to the point. Hi, I'm Yuna, and in the next few minutes, you'll get what's moving the markets, why it matters, and where money's flowing. Everything is fast, smart, and reliable. Let's dive in. First headline: Fed cuts rates but warns the fight isn't over. What does it mean? The Federal Reserve lowered rates by 25 basis points to a range of 3.75 to 4%. Chair Jerome Powell said the cut was appropriate given moderating inflation and a cooling labor market, but added the December move is far from guaranteed. Markets initially rallied, then faded as traders realized the Fed is still walking a fine line between growth and inflation risk. Why magnify it? This marks the Fed's second cut in 2025, officially starting an easing cycle, but one that could pause quickly if inflation data rebound. Expect short-term relief in equities, followed by careful positioning in bonds and rate-sensitive sectors. Possible affected sectors: treasuries, banks, real estate, utilities, growth equities, and the US dollar. Second headline: Tech earnings explode. Apple, Amazon, Netflix lead the charge. What does it mean? Apple posted better than expected iPhone and services growth, while Amazon crushed earnings with AWS revenue up 20% year over year, its fastest pace in nearly 3 years. Netflix announced a 10-for-1 stock split after a strong quarter, while Meta took a $15 billion tax hit that sent shares tumbling 7%. Why magnify it? The split between AI-driven optimism and margin concerns shows how the market is starting to differentiate, rewarding operational strength and punishing weak profitability. Possible affected sectors: megacap tech, streaming, e-commerce, cloud computing, and AI infrastructure. Third headline: Trump, 11 summit brings geopolitical calm. What does it mean? Presidents Trump and Xi met in Seoul, agreeing to have fentanyl-related tariffs from 20 to 10% and to suspend rare earth export restrictions for 1 year. Both sides called it a constructive reset. Why magnify it? This pause in trade escalation could reduce supply chain pressure and dampen inflation expectations, improving global sentiment across equities and commodities. Possible affected sectors: exporters, industrials, semiconductors, Asian equities, and commodities. Fourth headline: Tech stocks diverge. AI fever meets reality check. What does it mean? Alphabet surged 7% on ad strength, while Meta fell sharply after the tax charge. Microsoft dipped 4% on AI spending worries. The Nasdaq 100 still rose 1.3%, but intraday volatility spiked. Why magnify it? This is the first sign that AI optimism is being tested by fundamentals. Investors are shifting from growth at any price to sustainable profitability, bringing sharper dispersion in big tech. Possible affected sectors: semiconductors, cloud infrastructure, digital advertising, AI startups, and growth ETFs. Fifth headline: Cloud rebound signals enterprise recovery. What does it mean? Amazon Web Services reported its strongest growth since 2022, showing 20% annualized revenue expansion and record demand from corporate clients. Enterprise cloud budgets are recovering after last year's slowdown. Why magnify it? The cloud isn't cooling, it's evolving. Enterprise demand, powered by AI integration, suggests long-term strength in infrastructure and software as a service growth. Possible affected sectors: cloud and software providers, semiconductors, hyperscalers, enterprise IT, and data centers. That was your 3 to 5 minute brief. If this helps, the best free support is to subscribe, turn on notifications, and share it with people to help them too. Links to all socials and the written brief are in the description.